Well, before I turn it back over to you on this, I'm just curious, you've said in the past and just recently, and I think it holds very true when people say, well, I'm waiting for those rates to go down to those historic lows. And yet today's news about the rates, they're well below history. What is the rate typically that we see in the marketplace when it comes to mortgage rates? Not the lows, not the highs. What's the average?
Well, I mean, we've actually covered that a few weeks ago. Is if you go back and look at the 50-year average of conforming conventional 30-year fixed rates in the US, the average is over 7%.
Hmm.
So
Hmm.
this notion that rates are abnormally high just factually is not accurate. And of course, the media keeps talking about we're near a 7% market. That's not accurate either. As we just went over on our rate grid, we're in the very low sixes now, and we're in the mid to high fives on, government loans, FHA, VA. So we are already at a point where historically rates are better than average. And that's a hard concept to grasp when everyone still has this short-term memory of 2 and 3% mortgages from the pandemic, forgetting about the fact that that was a once in 100-year phenomenon that's not going to repeat itself anytime soon. And so those kind of rates were frankly what were not normal. So we're actually back to more of a normalized market on the mortgage rate side, where I think the challenge continues to be is on the home price side. But yet I don't see any relief in those prices either, because there's such a lack of inventory, such buyer demand, that I don't see home prices falling in any significant way anytime soon.